This strategy is the simplest and most consistent way I've found to pass top stock combine. It has allowed me to pass 20 combines in just 2 trades, and it's getting insane results for traders inside of my community. So now I'm going to give you every step you need to pass your top stock combines the same way I do. So to start, what is the strategy? Well, it's just a very simple setup that waits for the market to show its direction, then gives you one clean pullback. So you can see the market makes a new higher high or new lower low, then it pulls back to the 13 EMA. When price touches the 13 EMA, it must reject and wick off. Once price gives confirmation and closes, you enter the trade of the break of candle heading back into momentum. Place your stop below the wick and ride it to 1500 with 2 contracts. And that's it. As you can see from my trading history here, just like trade 1, trade 2, and funded. Trade 1, trade 2, and funded. So your entire combine, you're taking only 2 trades and you're hitting your profit target with just those 2 trades. And it includes everything else I'm about to show you. By the way, if you're struggling to pass your top stock combines, you can join the MTF community where I personally help traders pass their top stock combines and trade with me. So step 1 to pass the combine in just 2 trades, you really need to understand the math first. But most traders overcomplicate this. So I've broken it down to you in the simplest way possible. To pass a 50K top stock combine, you need to make $3,000 in profit while also respecting the 50% consistency rule. And I do this with just 2 trades for the entire combine. If the goal is $3,000, each trade just needs to be $1,500. I trade using 2 gold contracts. 1 gold contract pays $100 for every point the price moves. So with 2 contracts, that becomes $200 for every point. And if I want to make about $1,500 in just 1 trade, all I need is a 7.5 point move. So on the first day, I took 1 trade. I caught a 7.5 point move with 2 gold contracts, which gave me about $1,500. Then on the second day, I did the exact same thing. Together, that's $3,000, and the combine is passed. That's how I hit $3,000 in just 2 days. And because both days are the same, you meet the consistency rule without even trying. So once you understand the math, the next thing you need is the rule that keeps you disciplined, because your strategy doesn't fail you. You fail your strategy. And that's what this step is all about. See, most traders watch the charts all day. It makes them take trades they shouldn't. And that's how they blow up their accounts. Based on my trading data, 90% of my winning setups happen between 9:30 a.m. and 11 a.m. This is because the market has the most volume at the open. And that gives my setup the push they need. Here's all you do. Be at your desk a little after 9:20 a.m. so you're ready before the market opens. When the market opens at 9:30, just wait a few minutes. Your trading window is between 9:30 a.m. and 11 a.m. But most of the time, we're done by 9:45. Or at the latest, 10:30. You wait for the setup, you take it, and once you hit the goal of 1,500, you're done for the day. But this is where most traders slip up. You hit your goal for the day, and you think, let me take 1 more trade just to build cushion. Or you lose your first trade and think, I need to make this all back right now. So to avoid this kind of delusion, let me walk you through my exact risk rules. The first rule, if I win my first trade, I'm done. I walk away, and I come back the next day to do the exact same thing. The second rule, if I lose my first trade, I wait for the second setup. If I win that one, I walk away. The third rule, if I lose 2 trades in a row, I'm done. Only 2 trades per day if I lose the first one. So by limiting yourself to take only 2 trades per day, you force yourself to take only the best setups. Once you understand the trading rules, you need a setup that actually gives you that 7.5 point move. First, I'll show you the 4 steps in a clean example. Then I'll show you a real trade so you can see how it works in real market conditions and trade it on your own. To execute this strategy, you're gonna get to your desk right at 9:20 a.m. Eastern Standard Time. This strategy works in any futures market, but I exclusively trade gold because it has the best volume and consistent hit rate with this setup. To start, let's set up your chart, because without it, you can't manage your trade or execute the strategy properly. You're gonna go to Trading View, go up here and select the 1 minute button. And this means that each candle you see represents 1 minute of trading time. Next, we need to add 2 indicators, the 13 EMA and the 200 EMA. These are the only 2 indicators you need for this entire strategy. Here's how to add them. Step 1, click indicators at the top of your trading chart. Step 2, in the search bar, type EMA. Click on moving average exponential once and a curved line will appear on your chart. Now, to change it to 13, hover your mouse over the EMA label in the top left corner of your chart. Click the little settings gear icon where it says length. type in 13. You can also change the color. I use white for my 13 EMA. And you can also make the line thicker by adjusting the width slider. Now repeat the exact same process for the 200 EMA. Click indicators again, type EMA and click it. Hover over the new EMA label, click settings, change the length to 200. And I use gray for my 200 EMA to keep them distinct. And this brings us to step number 2. Waiting for our trade confirmation. This step is how we avoid getting caught up in bad trades. Now, this setup has 4 steps, and all 4 must line up. If even one is missing, we don't take the trade. The first thing I need to see is price make a new higher high or a new lower low. What does that mean? If the price moves above the last point on your chart, that's a new higher high. If it drops below the last low point, that's a new lower low. It tells me that the market has picked a direction. This is called a break of structure. So if I see the push price up and break that previous high, I know buyers are in control and I'm looking for a long setup. Now, if I see price break down and break that previous low, I know the sellers are in control and I'm looking for a short setup. So at this point, we need price to pull back to our 13 EMA. What's a pullback? A pullback is when price comes back toward where it came from instead of just running straight up or down. After a market makes a big move, it usually retraces a little bit before continuing in the same direction. And we're waiting for price to pull back to our 13 EMA line. That white curve line on your chart, that's where we want price to come back to. Why do we wait for this? Because entering here is like buying something on sale instead of paying full price. You get a better entry, a tighter stop loss, and a better risk to reward ratio. If you chase price at the top, you're paying full price with a massive stop. And that's how you blow accounts. So look at your chart. After price breaks a new low, we're watching and waiting for it to pull back up and touch that 13 EMA line. When it does, move to step 3. Now here's the step that makes this strategy work. It's the wick rejection. What's a wick? Every candle on your chart has 2 parts. The body, which is the thick colored part, and the wick, the thin line sticking out of the top or bottom. A wick rejection means price touched your 13 EMA, tried to push through it, but then got rejected and closed back in the direction of the trend. Look at this candle right here on my chart. Price came up, touched my 13 EMA, created this little wick at the top, and then closed back down. That wick tells me the seller stepped in right at the level and defended it. They said, nope, we're not going any higher. We're going right back down. This is huge for keeping a high win rate and avoiding small breakouts, because if price just slices through your 13 EMA and closes above it, that tells me the momentum shifted. But if it wicks off and closes back in the trend direction, that tells me the pullback is over and the original move is continuing. Now, even after the wick rejection, we don't enter immediately. We wait for confirmation. After the rejection candle closes, watch the next candle. For a long trade, enter when the next candle breaks above the high of the rejection candle. For a short here, enter when the next candle breaks below the low of the rejection candle. That break confirms that momentum is continuing in our direction. That's your entry trigger. That's when you place your stop order. Why do we wait for the final step? Because sometimes the price will wick off the 13 EMA and just chop around. If we entered on the wick alone, we get stopped out every single time. But by waiting for the next candle to break the high or the low, we're confirming that buyers or sellers are actually pushing price forward, not just bouncing. This single step eliminates 100% of fakeouts. Now, let's get into the most important step of the strategy, which is executing our trade, placing our stop loss, and finding our target. By the way, if you're tired of blowing your top sub combines, you can join the MTF community where I help traders get funded and trade alongside me. Now, for executing your trade, it's rather simple because we're actually using a stop order, not a limit order. What's a stop order? A stop order means you're catching price in momentum. After price wicks off the 13 EMA and rejection candle closes, you wait for the next candle to break the high for longs or break the lows for shorts. That's where you place your stop order. When price hits that level, you're automatically entered in the trade and you're riding the momentum. Now, this is one of the most common mistakes traders make while using the strategy, entering before the candle breaks. They see the wick rejection at the 13 EMA and think, okay, I'm in. But remember, we need that 4th step, the break of the rejection candle. If you enter before that break, you're just guessing. You're not waiting for confirmation. I've seen traders enter on the wick, watch price chop around for 10 minutes, get stopped out, and then watch the setup actually work out 2 minutes later after the candle finally broke. Don't be that trader. Wait for the break. For your stop loss, here's the rule. For a long trade, place your stop loss below the swing low, specifically below the low of the rejection candle's wick. For a short trade, place your stop loss above the swing high, specifically above the high of the rejection candle's wick. You're just placing it below or above the wick. That way, if price comes back and takes out that level, you know the setup failed and you exit with a small loss. Now, at this time, you can right-click the position tool, then you're going to select create stop order. After you place your entry, stop loss, and take profit, you just want to sit and wait for price to break your entry level and trigger you in. Now, I understand. Sometimes when the market starts moving in the direction that you want it to, it can be hard to be patient, but you absolutely must wait, because if you cannot be patient, then you will not succeed with the strategy. And as you can see here on the candle, price breaks above the high of the rejection candle, and that's where I get into the trade. I'm risking about $400 to make $1,500 with 2 gold contracts. And now, I just let the trade do the work. This trade took about 4 minutes to play out and made us $1,500 in profit. Day 1 complete. Now that example was pretty clean, but let's try this strategy in real market conditions. Because if you can spot the setup, even when it's not picture perfect, this strategy becomes really powerful to you. Alright, as you know, I start trading at 9:30 a.m. Eastern Standard Time, market open exactly. So let's go ahead and proceed and see what we get. Market is now open, but at this very moment, we don't have a new higher high or lower low, and the EMAs are cutting through price. I don't exactly have a setup, so let's see what happens from here. From here, we have price starting to create a new lower low. But let's see if we can get a pullback and then another low created. Nice pullback. Boom. Here we go. Step 1, a new lower low has been created. Now we must patiently wait for a pullback to our 13 EMA. Again, my white line here. And let's see if price actually respects the 13 EMA. As you see, a nice clean pullback to the 13 EMA and a wick rejection. So step 2, a pullback to the 13 EMA. And step 3, a wick rejection off the 13 EMA. From here, we wait for entry, break of candle. At the moment, we place our stop order exactly right here. Now, in mind, I'm already knowing that my stop loss will be above this wick once entered in, and take profit at 7.5 points. Let's go ahead and see if we get entered in. And as you see, while we're still respecting the 13 EMA, this setup is still valid, but our entry must be adjusted to the new break of candle. As soon as the next candle opens, boom, we're triggered in. Now I would have my stop order at this break of candle, entered in here. Stop loss, because we're in sales, goes above the wicks, and our take profit at 7.5 points because we're entered in at 2 gold contracts, and this will be a $1,500 trade. Now let's see what happens from here. Price pulling back a little bit, push down, and boom, in less than 4 minutes, take profit is hit. And this was day 1, we're halfway on the fresh combine. Now, this is day 2, same exact thing as day 1. We will be funded and ready to move on to that funded account. And if you like someone telling you exactly how to pass your combines without blowing your account, then watch this video next, because I'm going to show you exactly how I passed a 50K Tapsuck combine in just 2 days.